Well, hello everyone. Welcome to a fresh new week in the markets and welcome to Trading a Smaller Account. My name is Barbara Armstrong. I'm a coach and senior manager with Schwab, and delighted that you are all joining me in this class today. I know many of you watch this in the archives, but if you'd like to join us live, we link arms together every Monday and Friday at high noon Eastern, and we've got 45 minutes together to try and figure this stuff out. We started at the beginning of January. We reset the account every year, the first trading class of the year, to 25,000. And we decided this year our goal was to earn $100 to $200 a week. That was going to be our goal. We were pretending we wanted to either grow our account by that amount or generate an income. And so we're moseying along doing everything that we can to do that. So I want to thank all of you who are so participatory in the chat that show up live, each and every week. Today, we're going to talk about a whole range of things. So as I went along looking for themes or things to discuss, it turned out like iron condors showed up on my radar, long call verticals showed up on my radar, long calls with 1 ATR targets, and then a stock position with a target. And how might we determine targets on these things? And so, we're looking at, 4 different types of trading strategies, 5 different potential trades. And then we have an account where we've already placed a bunch of trades, and trade management, is as important a part of trading as placing a trade. Placing a trade just begins the journey. It's how you manage it along the way. And that really determines, helps define whether or not you'll be successful. So we're going to do a little bit of trade management, and we've got 3 stocks to look at in that category. So one is a long call with a 1 ATR target, one is a long put vertical, and then one is a buy right. Where we currently don't have a covered call on it. We were waiting to add another covered call, so we're going to look at that one also, and that one is on KMI. So we have got a jam-packed 45 minutes together. I just want to welcome, Lena, who was the first one into the chat today, and Jay, who came in behind her, and Cecil, and Marcus, and Wiley, and CB, and Josh, and Frank, and the rest of the gang. Thank you all for being here and being so participatory in the chat. Thanks also to Connie Hill for having my back and being in the chat. She's a friend and a fellow coach and knows all of these strategies inside and out. I've learned a ton from Connie. So if you've got questions between Connie and I, hopefully we've got answers for you. Okay. So here we go. If you aren't following us on X, man, you are missing out. Connie posts some really awesome stuff, and you don't want to miss it. I'd like to think I'm posting some stuff you'd want to see too, at Barb Armstrong CS and at Connie Hill CS. You can also wander over to LinkedIn, and you can find me there now, also where I'm also posting content. Before we get into the thick of things, just know that options carry a high level of risk. We do a lot of option trades in this class, and options aren't suitable for all investors. We also use the paper money software application on the thinkorswim desktop platform, which is a brilliant place to learn, hone your skills, make sure you understand your trading plan and how to make that come to life on this platform before you consider trading in your live account. I do a very, very modest market overview because 4 out of the 5 days of the trading week, Kevin Horner does a trading overview class. So you're going to want to catch that at the market open at 9:30 Eastern. And we're going to place, a bunch of new trades, manage some trades. And then I just want to remind you that if you've never been to a live event, if you go to schwab.com/events, you can see what's coming up. And these are all free to attend, my friends. So this coming weekend, I believe it's an intro to options and intro to technical analysis this coming Friday and Saturday. Kevin Horner, Rachel Daschle, and of course, Ben Watson will be leading the charge at that event. And then we've got a market drive coming up in May, and then an advanced options workshop at the end of May. I will be attending these along with others from, both the travel team and Ben Watson. We'll be at the one in Santa Clara as well. Kevin will be in Chicago. So if you're at these events, go up and introduce yourself to the coaches. We love meeting you. You know, we can take a picture together, have a chat. A lot of times people come to these things and they've got questions for me, and I love having that chance to connect. So there we go. Okay, so let's get out and have a look at what's going on. And I'm going to kind of go back and forth a bit. So the first one I want to talk about is KMI. So, you know, when we look at the S&P 500, we were in correction territory. We'd kind of pulled back more than 10%. But if we take a look at a one-year chart, we step back and look at the longer term trend, and I come down to this icon under patterns and say show price as a percentage, we can see that over the last 12 months, the S&P is still up 26%. And then when we come in and look up a little closer, we've now crossed this diagonal resistance line, and that appears to be acting as support. We climbed above the 10-day moving average. Some might say, finally, we're above the 30-day moving average. And here we are now sitting like a bird on a wire on the 100-day moving average. So some might say this is just a massive, perhaps bull flag. Now, could we end up going sideways for a while? We could. Could, you know, it end up tumbling back down? It could. You know, but right now, you know, the bulls are kind of saying, you know, oh, I'm feeling a little better. We're seeing a similar pattern on the NASDAQ. And, you know, when we look at that one-year chart, you know, we're up over 30% in the last year. And again, we were in correction territory here too. With the Russell, you know, more of the same. Here, we're up 40% on the Russell in the last 12 months, in the last 1 year. And again, we were in correction territory, a diagonal resistance breakout. If I take this line, and we move it up here, you know, so variations on a very similar theme across the board, right? And the same thing with the Dow. Okay, although the Dow, we're seeing a little bit of a pullback today, but again, that diagonal resistance breakout still up. This one is actually in fourth place, up only 17% in the last year, but it's up 17% in the last year, you know, not too shabby. And the VIX seems to be settling back down a bit, but still, you know, it's at 19.9, so back under 20, you know, which just seems positively sedate after, you know, being up here around the 30 mark. Okay. Yeah, these live events, you know, they provide breakfast. We'll have the coffee on in the morning. We'll even pay for your parking. We'll provide a lunch. And then for the event in Chicago, the market drive, there will be a nice reception at the end of the day. Yeah, it's pretty amazing. And actually, you can't bring in outside food and drinks. You know, like if you bring in a Starbucks coffee, like they'll let that go, but you can't, you know, go to Chipotle. Like we're providing breakfast and lunch. So don't fear, nobody will be faint from hunger at any of these events. Okay, so let's start with KMI now that we've done that. So when we look at KMI back here, you know, in March, we did a buy right covered call. We also did a long call vertical, and the long call vertical worked out just like we wanted it to. Okay. And you know, we were kind of doing just fine on our covered call where we bought 100 shares and sold a covered call, and then it started pulling back. And the reason I'm bringing this up is because when we come to KMI, we still own 100 shares. We're now down 173.99. And the reason we didn't sell another covered call is we just bought one back. And we said we're going to wait for it to kind of bounce and come back up here. But this is not looking bouncy. Does not look like it's bouncing in the right direction. And so we do have a stop on this. And our stop is at, oh, I didn't write down where I'd put our stop. KMI right here. Our stop is at 31.82. So if I draw that on the charts, we're not quite there yet, but we didn't get stopped out here. So at 31.82, we still, could lose another $50 if this continues to go down. But I look at this and I say, okay. And this is, I'm trying to walk you through how a trader might look at this. But when I bring up KMI on March 2nd, we bought 100 shares of stock at 34.09. We sold the 44 call. We bought it back for 3 cents. So we made $41 there. And then, let me just bring up my drawing tool. Oops, I was posting, can you tell? I was posting a double bottom pattern on a stock that we're going to talk about this morning, actually. So we made $41 there. And then we sold another covered call here for 67, and we bought it back for 9. And so we made another $58 there. Now, I'm not counting the transaction fees, which were, 65 cents to sell it and 65 cents to buy it back, but we were up $99 on that. Okay, so we're up 99 on the covered calls that we sold, which, isn't too shabby. Remember our goal was to make, our first goal was to make $100 a week in this account. And, at 30,000, we've already met that goal. So we changed the goal to 200 a week. Now, what the market giveth, the market can taketh away. We could end up, back under that $100 a week target. But with KMI, I think that given where we are, we're going to just exit this position. Okay. And if it bounces and it comes back, we're going to cancel. We're just going to cancel this order. And then we're going to come into KMI and we're just going to sell this position. So it says we're down 182, but when we take that 99 off, we're down 93. And it's a flesh wound, but would you rather be down 93? Or if the chart indicates that this may be continuing to fall, do we really want to lose another $50? And, no. Yeah. So we're going to come to create a closing order and we're just going to sell this. Okay. Fire in the hole. There we are. So there's our first one on the trade management. That was KMI. Now let's come and look at Nvidia, because we talked about Nvidia Friday, and we have done some iron condors on Nvidia, and those have worked out well for us. And when we looked at this Friday, we said, well, it could be continuing to go up. So we're going to wait and maybe leg in and look at doing a short call vertical. And if we can get enough premium, like it's come up here to this 195 once, twice, kind of in the hood, 3 times, 4 times, 5 times, 6 times. So could we sell, a short call vertical where the idea here is we're selling a call, buying a call above it to define our risk. And, then we can add, if it comes back down, a short put vertical and create an iron condor by legging into it. And so today, and this is a live candle, so it could change by the end of the day. Like it gapped down on the open, it's trying to rally, but so far it's trading below where it was. And this Harami pattern is an indication that this uptrend, which has now been like 1, 2, 3, 4, 5, 6, 7, 8 trading days in a row, may be coming to, a close. And so if we looked at this, could we come out our first, our last one was March 20th. Could we come out, and when is earnings? May 20th. So could we come out to May 15th and say we want to sell a 195, and does it trade more than 1 million shares a day? Check. Do we have lots of volume on the options? Ridiculous. Like, yes, tons, 77,000, almost 3,000 contracts traded today, 10-cent bid-ask spread. So check, check, check. 195, 200. The next question is, do we get enough juice to make it worth the squeeze? And what we're looking for here, what makes an iron condor delicious is that if we sell a short put vertical on this with the same strikes, it can't possibly end up above 195 and below whatever the short put strike is on the same day. So we collect a second credit for the same $5 in risk. So we're risking $5 minus the 165. This has to stand on its own because maybe the short put vertical trade never does go on. So we're going to make this 335, which is 5 minus our 165. So that's a 49% potential return on our risk. So we're going to say, okay, we're cool with that. We're going to put in an exit and say, hey, and we're only going to do one contract because, we don't know if the short put vertical will end up being placed. That's our intention. But if we get 80% of our max gain, we'll exit. And we're going to put this, I know it's a short call vertical, but because our intention is to leg into an iron condor, we're going to put it in our iron condor bucket to remind us that this is our intention. We're legging in to an iron condor. At least that's what we're aiming for. Does that make sense, guys? Yeah, somebody said in the chat, by the way, I just attended the Dallas Advanced Options event. It was great, would highly recommend. Somebody else said the live events offer such great value. Yeah, and they're free. And somebody else said, bring a coat. I froze in Orlando. I remember being a client in July in Metro Detroit and looking for gloves and a scarf in the trunk of my car. Like, they do keep those rooms cool, so wear layers. So yeah, that's a very good recommendation. Reminder. Okay, so that's Nvidia. Okay, so what about AMD kind of going on with this theme? So with AMD, we have another kind of, it looks a bit like a double bottom setting up, doesn't it? But it's kind of like in the middle of this pattern. And then what we have today is we have this hanging man setting up. Now, a hanging man is not a complete pattern, like from a technical analysis perspective. So can I recap why I started the short call vertical on Nvidia? The reason I did the short call video on Nvidia first is because it's closer to the call side than it is to the put side. So if I went out and we'll just make this May, I'll update this to May 15th. If we went out and tried to sell this 170 strike, which is kind of where we would want to be from a technical analysis perspective, we'd probably get very little. So if we came out here to the 170, we'd only get 65 cents. So we're going to wait, and then on Friday, if it has pulled back, then we can leg in. And if it has come down closer to this 170, then we can add the short put vertical in then. And so right now I'm just going to hide that because we don't have the short put vertical side on yet. But that's why we did the short call vertical side first, because it's closer to resistance. Okay, so now if we look at AMD, if we're going with our iron condor theme to begin with, like we kind of have this big double bottom setting up, but it's been in this range now since like the end of October, almost Halloween. And so if we look at this and say, here's another one where we're closer to a resistance level, and this could be an indication. Now, if we were meeting tomorrow, we might wait to see if it pulls back again. But this has had like a 9 or 10 day uptrend, so this wouldn't be unexpected to see it pull back for a couple of days. Could we come way up here to the 265? And why would we want to sell the 265? Why not just sell like and maybe we could sell the 260 because it came up here to 260 for just a day, 260, but on this day it closed at 244. It hit here, on this day here, sorry, our high was 267, but it closed at 264. And it was only there for a day or so. Here, closed at 258. So that was under 260. Here it closed at 259. So maybe we could sell the 260 instead of the 265. And we'd get a little more premium. Like that still looks kind of reasonable. If somebody's asking about Chicago, Chicago will be myself, Kevin Horner, and it'll be myself and Kevin Horner, and Joe Mazzola will be there also. Okay, so we've got that one. So if we come out to, now we don't want to come out to May 15th on this one. Why? Well, one, it's got to be $10 wide. And two, earnings is May 8th. So we don't want to trade this over earnings because stocks can gap and that can work in our favor. It can also take us to max loss in a heck of a hurry. So if we look at this and say, well, we want a $5 wide, and if we're looking to leg in, again, trades more than $1 million, lots of volume, reasonable bid-ask spread, let's look at selling a vertical, and here we get 160. So if it's 160, $5 minus 160, 340, we know that's going to meet our criteria, right? We're going to be in this for 25 days. We want at least a 25% return on our risk. We've got 47, so we're good to go. We're going to put in an exit to create an opposite order at 80% of our max gain. So that's 32 cents. The way I do that in my head is I just say if it was 90%, it would be 16 cents. So, times two. Not that you guys aren't all better at math than I am, and we're going to, again, our intention is to leg into an iron condor. Our intention is to leg into an iron condor. And so we're putting it in our iron condor group, and that's why. Oh, did I mess that up? I did this as a buy. Okay. Thank you for catching that. You guys are the best. Okay. 260. We're selling. It's really easy to kind of catch the edge and flip this around. So we want to sell. Okay, sorry guys, somebody, typed in, yeah, so, yeah, we had a short unexpected break there. And thank you, to Kevin and Susan for catching that I had put that trade in backwards. And so I went back, we want to sell a short call vertical. And I kind of clicked the edge, which is very easy to do. and flipped it to a debit spread instead of a credit spread. So we want to sell. We're doing a short call vertical. Our intention is to leg into this iron condor. And so there we go. Fire in the hole. That's AMD. Okay. Okay. So that's our trade number 2. Let's come back and look at another trade in our account. And I know that we did 2 trades on Friday. 2 short call verticals, one on CRM and one on Microsoft. We're underwater on both of those. I wasn't going to talk about those today, but when we look at this, is this a change in trend? Is this a change in trend? No, it's potentially setting up another bear flag. So are we going to worry? No. How about Microsoft? Again, are we going to worry? We are not, at least not yet, even though it's, a rally here today. Okay. So that's those 2. But what I wanted to talk about was a long put vertical that we did on Flutter Entertainment. And I'm going to come in. Oh, I am at 3 months. Okay. So with this, let me just change this to our price axis. Give us a little more room on the bottom. So this is in the money. Or it was in the money. It's not in the money now, but it was in the money. So when we sell a long put vertical, the goal is for it to go below both strikes and stay there. This expires on Friday. And so, this is one where if it were in the money, that can be worrisome, except that it is this is the buy side. So we get to decide if we execute. Now, the sell side could be executed at any time, regardless of whether it's in the money or not. And as we approach expiration, it can be more likely for something to be executed. But if we get another down day, we're down $225 on this one because we did 2 contracts. But we're just going to watch this, and if and or when we get another big down day between now and Friday, if it continues to go up, we're out. But the deal with these is if we're down 50%, we exit, and we're not quite there. So with that one, we're watching it. And if you see a little in the money, it means that it expires this week and it's in the money. So we want to pay attention to that. Okay, so that's KMI and Flight. We've done our review. Now let's come and look at CR Coreweave. So Coreweave, let's just back this up a little bit. So Coreweave was, on the struggle bus, right? Like year to date, although, year to date, it is up 55%. Where's January here? So from here, made a big move to the upside, but it was really trading in a downward channel, from June of last year. And then we started to see a series bit of a panic pattern, and now we have this diagonal resistance breakout. And so if you're thinking like, ooh, this could be turning around, now it could still be a fake out, but could we look at that and say, could we do maybe a long call vertical so that even if it pulls back, we've got earnings coming up on May 13th. Could we come to the trade tab and do something out to May 8th? So we'd be out of it prior to that. It's trading at 111. And my first thought was, could we do the 105, 110? And I looked at May 15th. With the goal of being out prior to expiration. So if we did a vertical, it's already through both strikes. and we're paying $2.58 for it. And so if it continues to go up, we could be out of it, long before we get to earnings. And so, how many contracts could we afford to do? If we did 2, we'd be risking 520. We're going to put in a target to get out at 50%, which is 375. And you're saying, well, you're leaving $125 on the table. Yes, and happily. Happily. So, why do I say that? It's like, well, if you can make a 50% return on something in 32 days, like that's, not too shabby, many would say. So we're going to say if we can make 50%, we're going to be pretty happy campers. So we're going to make that 390, good till canceled, confirm and send. And we're going to put that in our long call vertical group. And so with this one, if you wanted to draw that on the chart, first I need this kind of line. And our strikes were 105 and 110. Now, if we went, sorry, I had an extra 0, an extra 1 in there. Long call vertical, 105, 110, May 15th. So that when we look at this on the chart, we know exactly what we're aiming for. Oh, that didn't show up. So I didn't, well, it says on the right. Oh, it's probably too long a time frame at 1 year. So if we come down and make it 6 months, then it will show up. So what this is showing us is it's through both strikes. Now we just, even if it comes back, we've got, 30 days for it to come back up again. Okay. Okay. So that is trade number 3. We did 2 short call verticals with the intention of legging in. And now we're going to look at a couple that I looked at and said, yay, but nay. So Tesla has been downtrending. It is down 21% year to date since it hit this high back here on, close to Christmas time. It's been kind of rolling down the hill using this 30-day moving average as a ceiling or a resistance level. And, one might look at this and say, oh, it looks like another bear flag setting up. But we don't have confirmation yet that this short-term uptrend is complete. We don't have a close below the low of the high day. And so what are we going to do? We're going to take one hand, take the other hand. We're going to sit on them until we see what we technically need to see. How about ADP? Well, this too, this is a 6-month chart. It's been rolling down the hill the whole time. Year to date, down 25%. Sound familiar? Looks like this 30-day moving average is currently acting as a ceiling. And, it fell. And today we have this kind of a piercing line candle, which is saying, hey, this could be moving up. Could be a trend reversal, but it could also, be setting up another bear flag. But do we have confirmation that, the downtrend is about to continue? No, we don't. So what are we going to do? Move on. How about AMAT? Now this is the other side, right? So, if we look at this, we might say, well, if I'm playing I Spy with my little eye, I saw this little double bottom pattern set up and it broke out, but now it's pulling back. But it could pull all the way back to this 375. We don't have any confirmation yet that this pullback is complete. So what are we going to do? We are going to wait. We are going to wait. Exercise patience, my friends. So on these 3, yeah, interesting setup, potential, but is it complete yet? No. Okay, so let's look at Fly. So here's a stock called Fly. If you're not familiar with this company, it is in the industrial sector. And, if we came and looked at the sector indices, And, how's industrials been looking? Yeah, not too shabby. And if we look at over the last 3 months, what sectors have been leading? Well, industrials is in fourth place over the last 3 months. It's in the top 3 behind materials and financials over the last 4 weeks. So this is in a strong sector. It's in let's come back to fly. It's in that aerospace industry, and we've seen this big double bottom pattern set up. And, and today we have this bullish engulfing pattern. So it broke out, pulled back, and then today we have this bullish engulfing pattern. Now, this is a live candle. It could change by the end of the day. But if we're looking at how to establish a target, with a double bottom pattern, we have a range here of about $17. So we could say, well, if this breaks out, a technician might put a target around 50. And when we look at that, this previous high here was 49.59, like pretty close to 50. So could we make a target if we wanted to buy the stock? And this is in our snack bracket. We could afford to buy 100 shares of stock. So could we make our target 49? Well, we could do that. So and where might we put a stop? We might say, well, hey, if it goes back below this 33.50-ish level, it's not going in the right direction. So if it goes 3% below that, say to 32.49, we want out. And so if we look at this and say 32.49, 37, so that's around $500 we're risking. Now it could gap down, we could end up losing more, but the intention is to define our risk, and that's how we're attempting to define it. So we could put in a target here around 49. And some might say, well, like, why not sell a covered call? Like, it looks like the premiums on these are pretty rich. And we could do that. We could do a buy right. I make this 20. I'm only getting, the bid-ask spread on these though is very wide, $1.15 to $2. So we might have trouble exiting. So maybe we'd want to sell that covered call if it gets up a little closer, where we get a richer premium perhaps. So for now, we're just going to buy shares of the stock, and we're going to do that with an OCO bracket where we're going to put in a target of 49 and an exit of 32.49. One of the things that I like about thinkorswim, and there are a lot of things I like about thinkorswim, but one of the things is that it kind of will do the math for you. So it's saying your target is $11.17 higher than where it's currently trading or where you want to buy it. And it's $5.34 below. And, we're investing $3,783. We can risk, we've got $15,000 sitting in cash, like half our account. So we can afford to do that. So this is a stock with a target, and this is our target is based on the double bottom pattern. Okay, so we've sent that one in. So that's fly. Now, with notes, where do you see notes? And I just recorded a short video that's in the trade management mini sessions that you can go and watch, but we're going to go and look at a position on Apple. So with Apple, we did a long call, and here's our target, and here's our exit. And I forget what day we placed it. It was just, I think it was Friday. So let me put a little thing. So we placed this Friday. And so the deal with the one ATR target and exit is that at the end of the next trading day, if it hasn't gone up and hit our target, then we're going to take our exit, which is at 253.18, and we're going to move it up to $1 below today's low. So that would be 256.66 is today's low. Let's just assume that this is the end of the day. And so we're going to come to our monitor tab. We're going to come to our working orders, and we're going to come to Apple, and we are going to come over to our three little hamburger lines and cancel and replace. And then we're going to hit our sprocket and come in and say, we want to move this up to 255.66, $1 below. So we're moving it up by about 250, 255.66. 255.66, save, confirm and send, because these are intended to be short-term trades. And if they don't go according to plan, then we don't want to let time decay eat our lunch. Somebody asked about IREN. In this class, we did not do a trade on that. Exit adjusted. Okay, so we have adjusted that target. Now, if you want to see, and let me just bring up Trader Talks. So if you haven't subscribed to the Trader Talks channel, you're going to want to do that. So one, if you missed the class on Friday and you want to watch it, you can do that. What first comes up is whatever's being taught. Then if you come to playlists and come down to these trade management mini sessions, one, I talked about some different candle patterns today. If you're new to candlesticks, there's a bunch of short videos. So you can just come and look at, whichever one floats your boat, or you can do some binge learning. Most of those are 2 to 5 minutes long. But if you continue down, there's an example trading plan for a long call with a 1 ATR target. There's an example trading plan for a short call vertical, which we did an example of today. There's an example trading plan for a buy right covered call. And these just give you a framework from which you can create your own trading plan. And then if you come down to the bottom, I'm just in the middle of re-recording most of these. So this one, I think, was the last one posted. It's a 7-minute video on just all about notes. So having said that, if we come back to thinkorswim, I was thinking as I was looking at my monitor tab for this example portfolio today, that when we come down here to long calls, whenever we do a long call, we always put in a note, because we're put in whether it's a swing target or a 1 ATR or, so we could come in here and type in notes. And then we can add that. So we're going to add that and click OK. So now when I look at this position, I can see that I have a note, that says it's a 1 ATR target. Okay, so that we know that this requires, when we look at it, if we have somehow forgotten, we know that this requires daily management. And the same with a long put. You can add a note category. You can also see up here if you've added a note, what your target is based on. And you may not want to add a note column to every group in your monitor tab, but you may want to add it to a few. So one of the things, there's a survey in the chat today. I want to thank Connie for reposting that. And here's the deal with the survey. There are 2 questions. So if you click on the link, there's 2 questions. 1, I hated it. 10, I loved it, and I'm going to keep coming back. And then there's everything in between. There's also the ability to put comments in. So if you'd like me to cover a topic I haven't covered in a while, if you have comments about the pace, is it too fast or too slow? I promise if you fill it out that I'll read each and every comment. So will the management team. So thanks for doing that. Another favor I'd like to ask, if you would hit the like button. What that does is it moves this webcast up in the algorithms for YouTube so more people can find this content. So if you'd hit the like, I'd appreciate that. Subscribe to the channel if you haven't done that. Consider attending a live event if one comes to your neighborhood, particularly. That's how I got introduced to this world of trading back in 2011, and I will be forever grateful for it. And and that's a wrap. So up next will be Mr. James Boyd. One last thing. I know that we one thing that's come up often in the surveys is please review what you did at the end of the class. So we bought 100 shares of Fly. We did a long call vertical on Coreweave, CRWV. We did a short call vertical on Nvidia and AMD with the intention of those positions being a leg into something we're going to turn into an iron condor because these are in a big sideways range. And then we closed out our position on KMI. We also did some trade management. We discussed FLUT, the long put vertical we had on that. And we adjusted a 1 ATR exit position on Apple. So we crammed a lot into our 45 minutes today. So thanks for joining us. I hope your ears aren't bleeding, and I'll see you for getting started with technical analysis tomorrow. Stay tuned. James Boyd coming up next.